Yo, what is good? We're back with another video. Today we're going to be going over breaker blocks. I got this idea from another Discord member. If you're not in the Discord, join it. It's down below. It's free, so go join it. Let's get right into the video, baby. So what are breaker blocks? Breaker blocks are one of the best algorithmic patterns to trade. I love trading breaker blocks, and what makes a breaker block even better is if we have a fair value gap inside of the breaker with the breaker. So let's go over what a negative breaker is. So we have a high, we have a low, we have a higher high, and then we have a lower low. And preferably this higher high right here trades into a higher time frame liquidity sweep or a higher time frame imbalance, something that is on the higher time frame that gives us a reaction to create a lower low. Price then trades back up into this low right here and then continues lower. The breaker block is the last down close candle before the down move that created the higher high, or it can be the consecutive down close candles if we are looking at a negative breaker block. And then price should not disrespect this high here. So if we're trading off this breaker block right here, we should have our stop above this high right here. We do not want price obviously to come up here. You can have your stop up here, but whenever I trade breakers, I usually will have it above this high. Now for a negative breaker, we have a low, we have a high, we have a lower low, and then we have a higher high. Price trades back into this plus breaker, which is the last up close candle or consecutive up close candles before the down move. Trading into that higher time frame PD array, we get a market structure shift. We have our plus breaker, which is the up close candles. Price trades into it and then continues higher. And preferably, we have a fair value gap somewhere in between this price leg right here that gives us our unicorn setup. So now, not only do we have a breaker block, we now have a breaker plus a fair value gap that creates a unicorn setup. One of the best patterns to trade that I like to take often. So let's get into some examples. So right here, if we take a look at NASDAQ, we have this breaker block right here. We have a high formed, and then we have a higher high here. Price trades down through this low right here. So now we have a market structure shift, and now we have a breaker block. So this down close candle is our breaker block after price forms a candle below this low. Now price should not trade above this high, and we see price comes up, trades into this breaker block, and continues down lower to sell side liquidity down here. And if we take a look, price also traded into a higher time frame PD array. We took liquidity, we came down through this low, forming that breaker, trade inside of the breaker, and then continue lower to our sell side objective down here. So this was a 4-hour example. So let's go down to a lower time frame. Right here we have a plus breaker. If we take a look, we have relative equal lows over here. This is probably a daily sell side liquidity right here. So if we take a look, we have a low here. Price trades up, trades down here, stopping out all this sell side liquidity, these relative equal lows. Price expands higher. Now we have our unicorn setup. I would most likely use these two candles right here. And as we see, price has a fair value gap with a plus breaker. We have relative equal highs acting as the draw. Price trades down into this breaker, expands higher, trades back into it one more time. Then we hit our objective of buy side liquidity. So now we have a breaker, fair value gap, sell side swept on the higher time frame. We have a market structure shift. Now we have our unicorn set up to trade. Boom, take your entry. We expand buy side liquidity. Now we have an hourly example. Let's go down to a 15-minute. So if we take a look right here on the 15-minute, New York opens right here. And if we have a look right here, we have hourly sell side right here. And as you see, price trades down into it. We have 0 body closures below it. And then we have our expansion higher. So we have a high right here. This is our breaker block. So we have a plus breaker with a fair value gap. So price should not, I'd probably have my stop down below this low over here. not below this low because they're so close, so it doesn't really matter. And then we have highs up here acting as buy side. And then price, does it hit it the same day? Yes, at market close, you see we trade down into this breaker block, we expand higher, taking out this buy side liquidity. And if we measure standard deviations, no, we don't actually get up there. So right here, you see that price has a high here. We're just chopping. We have a new high taking out this high, so we have a swing high. Price trades down into this sell side liquidity, expands higher, creating a fair value gap with a breaker block. Price trades into this breaker block, expands out of it, and it does not trade into it again over here. And then we finally expand to take out that buy side objective. So now we have a 15-minute, 1 hour, 4 hour. Let's go down to a 5-minute. So actually this happened this morning. I just came to this, and if we take a look right here, we have price expanding higher, having a high here, a low here, a higher high, taking out all these buy stops throughout here, this low resistance liquidity run throughout here. So now we have a high, a low, a higher high. Price trades down through here, and if you take a look, we do not take the sell side objective. So we have a magnet acting as sell side down here. So now we have breaker plus fair value gap right here. So now we have a unicorn setup, and price should not breach this high. And it may, because this high is pretty far from this high. So if you see that, usually price could trade through this. So in this example, I would probably have my stop above here, right around here. But if we take a look, price does not trade above this high before we hit that sell side objective down here. So once again, we have a high, a low, higher high. Price trades down through this low, not taking the sell side objective. And if we take a look, we traded into higher time frame buy side right here. We take out that, and then price expands down through this low, creating a fair value gap, and then we trade finally down into that sell side objective. Now, if we go to the 1 minute, I can show an example pretty quick because this was a trade that I took on Wednesday, and I might as well go over that because I know where it is. So right here on the 1 minute time frame, we have a breaker block. So price took out, or price traded into an imbalance somewhere over here with this low right here. So if we take a look, we have a low, we have a high, we have a lower low. Price expands through this high, so now we have a plus breaker with a unicorn, or with a fair value gap. So now we have a unicorn setup. My entry was right here. I had my stop below this candle's low, and I targeted this fair value gap. So right there, plus breaker with a fair value gap, we have a unicorn setup. This is one of the best patterns you can trade as an ICT trader. I love trading this. If we have a breaker with a fair value gap and the context is right, I will usually take that. Right? I was pretty much just targeting that high, and price delivered nicely. And if we take a look, if you watched my standard deviations video, we reached that -4 and we had 0 body closures below it. So my real profit target should have been equilibrium of this range right there. So if you keep watching my videos, you can start putting all this together and creating your own models, right? You can use this on the 15-second. I probably can find an example real quickly. Let me look right here. We can just take a look at that. So right here we have a breaker, negative breaker. We take out buy stops, so we have a high, a low, a higher high. Price trades way down through this. We come back up, trade back into that breaker plus the fair value gap. So we have our unicorn setup, and we have internal acting as sell side. So we short here, price should not come above this high. So I guess you can just risk off the highs because it's only 5 points. Targeting sell side, let your runners down to this low. And as you see, price trades into it. And then we get that expansion down. So as you see, I gave you a 15-second, 1 minute, 5 minute, 15 minute, 1 hour, 4 hour examples. And if we go to the daily, I probably can find one. Actually, we have one right here because I want to see price. I don't think we'll actually get the whole way down here. And actually, we had one right here. So we had a breaker here. We have a high. We have a lower low. Price trades through this high, breaker, deliver to buy side. So you guys can see that these models happen on all time frames. As long as your context is right and we are trading into a higher time frame PD array, the breaker block will be a lot more efficient and give you better price delivery. So whether you're using the 15-second off 1 minute PD arrays or 1 minute off 15-minute PD arrays or 5 minute off hourly PD arrays, it doesn't matter. Whatever time frame you're comfortable with trading, these patterns will work as long as the context is there. So I hope you guys enjoyed the video. If you're not in the Discord, what are you doing? Join it down below. If you have questions, you can ask me. I'm very active in it and I will answer your questions most likely. I'm not saying I know everything. I don't. So don't come in there thinking I know every single thing about ICT, because I don't. I only trade off of 2 PD arrays. I don't trade order blocks. I don't trade mitigation block, or sometimes I will actually. I don't trade rejection blocks. I don't trade everything. I trade mostly breakers and fair value gaps. Fair value gaps are my entry model, and if we have a breaker, if the context is right, I will usually trade it on the 5 minute time frame. I usually do not trade it on the 1 minute or 15-second unless we have a fair value gap and the context is perfect. So don't come in there thinking I know everything. Just don't do that. Other than that, I hope you guys enjoyed the video. I will be back with some more educational videos probably. So I'm out. Peace.